Hi guys. Okay, hope you had an awesome weekend. We saw a massive BTC liquidation happening just 2 hours ago. So it raises the question. Let's bring the volume down, okay? It raises the question: is Bitcoin gonna hurt us some more, and is this gonna hurt our altcoins? I clicked on the wrong one there. You see, guys, this is the thing about now I've kind of given away the surprise. We've got a guest here today as well. I wanted to get there, but okay, gave it away. Yeah, I can see Peter laughing at me there in the background there. Come on, Peter. Okay, but in any case, it opens the question with this massive, fast little move. We always have the saying, if it's fast, it won't last. So typically, I'm in two minds at this stage. My HODL mind, my spot trade ownership of altcoins, looking to see good upside, wants this to be bullish. So I want to see the market push to the upside. And then the trader brain in me is obviously firing off signals saying, go short, go short, go short, some more. So I'm going to explore those two ideas with you guys very briefly today. We're going to be looking at some liquidation maps or funding rates, actually not liquidation maps, funding rates as well. And just do a quick reminder of where we are with some of the coins that we sold, like Solana. I begged you, sell at 240, sell at 240. It's at 220 now, and so forth. So just a brief update. And then we're going to bring in our host in the background. So while we're in there, everybody just give him a 777 because bad admin me as well brought him in last minute, and he was so gracious to say yes. So send him some love and go and follow his Twitter feed as well. Peter will bring it up for you guys at the bottom of the screen somewhere. Okay, let's get into business now. So now everybody's updated. Okay, so the important thing for me today, just to move forward in the week, is always important just to keep an eye on the weekly time frame. It can screw with your mind if you're zoomed in too much, because then you're going to go through a bull market and a bear market, everything in a week, and that kind of can tire you. There's a reason they call this the emotional market cycle and not just the market cycle. It is driven because people's emotions create the actions that form the fractal that always looks, when we look back in the past, always looks kind of the same. So just as a reminder there. So the weekly is very important. Now, the fractal that I have and the rule that I apply with the fractal is very simple. We remain bullish in Bitcoin, and we remain bullish for altcoins for as long as what? We have strong bearish divergence and we stay above the divergence pivot. So very simple to explain to you guys. Things go up. The RSI will go up as well. When the RSI starts turning in the opposite direction and things go up, that's when we worry. And that is when strong bearish divergence occurs. Now, this is in most cases a bullish signal, unless what happens? We fall below the originating pivot as support, meaning as long as we have divergence and we stay above that range, you believe that there's going to be more. But once we fall below that, things get hairy. That is the explanation. Now, there's many of these divergence charts out there. This is the best one I found because it puts them into two categories. Your reversal divergences, I'm trying to pick tops and bottoms, and your continuation divergences. This is where we're looking for the move to go on. This is what you want to be trading, especially if you're new to trading. Stop trying to pick tops and bottoms or pick your finger or your bum. Your fingers will stink, you know. Try and work with the continuation. It's going to serve you better going forward long term. Now, back to the fractal. Let me just clean this off the screen real quick. If we then look at the chart in the same way, what have we found? We had strong bearish divergence there. So at around 43, the exit signals would have been firing for the traders saying, get out, get out, get out. And Bitcoin went up another $20,000 plus at that stage. And the reason why is simple. We stayed above the originating pivot as support. So any retraces at that stage can be considered as buy the dip retraces. That's what we want. Okay. Once we started creating more divergences, but we failed to stay above that line, that's when we worry. Okay. And as a result, that is how the divergences finally turned the trend and turned us into a bearish scenario. We did the same together. We launched the YouTube channel around this time. Okay. We did the same together when we reached the bottom. We were looking at 15K as a buy, and we went really bullish at around 20K when we tested and reclaimed the divergence pivot, leading us to where we are right now, guys. Now, I made a tweet, and I just said this earlier. Not enough energy and time is spent on people looking to take good profit zones. Everybody is looking for everybody to give them the best buy level, and that's typically how this forms, this greed, this emotional market cycle. Give me the buy, screw the sell, I'll figure it out when we get there. And that's where most people burn their fingers. So what we're trying to do with this is we're just trying to look at where the sell should be. And this is what I found is to be the best strategy for that. So here we are right now again. So we had bearish divergence, and rightfully so. When we were around these levels at around 80, I was cautious. I explained to you guys that's bad if we do what? Fall below these levels. We rallied higher. We had to retrace. We used this as a buy the dip. Don't worry, we can buy the dip. This dip can dip until that level, and if it falls below that level, then it's bad. And we did exactly the same there. This was cautionary, but as I explained to you guys at the time, you want to see a whole week open and close below a level before you can even consider it lost. So this was just a little bit of a fake out, shakeout. We went long at these levels, and we drove price a little bit higher as well. And now we're at the stage where I believe we are going to potentially push a little bit lower and test these levels. Simple. Now, I gave you guys a very long explanation, but I wanted you guys to get into the right headspace for what I'm going to say next. Now, the rule is, as always with this channel, we don't try and hold on to predictions. We take things one level at a time, one support level at a time. And if you look at this time frame, we look at the Bitcoin on the daily. I'm just going to take away the RSI. This was the area where we wanted to see the short for continuation for bearish play, and maybe go and test 104. We took a higher high, which means the chances that we're going to go and make a lower low now becomes less. It doesn't mean that we can't go retest that support level at 108,500. So there is the door is open for more downside, but because we made the higher high, this support now becomes stronger, more relevant for us. So on the daily time frame, the trend, if we then zoom out, could still be considered as bullish, this entire consolidation, because we're consolidating in a fashion where if you spend more time being in Bitcoin, the chops still chop up higher, and they still all chop up higher. So as soon as they start chopping in the opposite direction, that's when we really need to start reconsidering the buying the dip theory. Okay, this then brings us to the 4-hour time frame. Now we're all up to speed where we're at. 2 levels to keep in mind. Okay, the weekend came Friday. I went short with everybody in the Discord. I shared the short with you guys on YouTube, and I tweeted it out a couple of times. And the play was very simple. Strong bearish divergence, and we have lost the originating pivot. So this was the thou shall not cross line. We want this to hold if we want to be bullish. We lost it, which is then turned into resistance. And subsequently, we shorted the market, and we're still in that play. So that is where we are, and everybody's now up to date of the trader in me. You know kind of where we are within the big picture. So we're far away from being bearish on our HODL bags. But this bearish pressure that we're experiencing right now could potentially push a little bit lower. And what I want to see is, what I don't want to see is, I don't want to see us fall below 109 short term. Because if this then starts falling below this level, 108 is going to probably get taken out. And then all of this that I've just said, invalidated, thrown out, we need to rethink. Okay, so keep that in the back of your head. And while you do that, then let's have a look at some of our altcoins. So I'm going to just take you to Solana. Solana, same play, guys. We were tracking this Elliott count, and I explained to you guys for me that this is nearing the end, or a fifth wave. I showed you guys how I use the RSI to kind of find those waves. It just works better for me personally. We've got an Elliott Wave expert right in the back. I can't wait to bring him on. He's going to be giving us some more Elliott Alpha. I can't wait. And but the main key here is if I simplify this, look at the RSI and look at the following rules. So we don't worry about hidden strong bearish divergence until what happens? We make our higher high in price. We make our lower high in the RSI, okay, and we fall below the pivot. Now, this was a messy one. I give it to you. Very messy one, but it did play out in the same way. Fall below it, things get bad, and then that's it. That's why our TP was set at $240. Now, RV, the level was 300 to hold. If it holds 300, we're good. If it loses 300, things are going to get bad. And you can see it's lost it. Okay, 300, massive sell-off. And for Link, the hope was that we were going to hold 23.9, and we've lost it. Now we're at the bottom of the channel. So the move was fast. Brings me back to Bitcoin, the other angle, the trader in me. Why do I think we need to consider the short? Well, simple. If the market now decides to rally up quite aggressively, what we're going to find is, you're going to find as price creeps up, the RSI will overshoot these levels, creating hidden bullish or bearish divergence, meaning price is going to get there, the RSI is going to be much higher, and that's going to cement in the potential for more, which then brings me into the theory that this is the shorter time fall. We could potentially get a truncated fifth or something like that. Matt, yet again, here's the expert. He's going to give us a different angle. And that will then lock in the fall or cement in a final fall for a potential fifth wave. Okay. Fingers crossed, guys. We take things level by level. So the short-term trader in me is saying to myself, this is the area statistically, if that's going to play out, where would the hidden bearish divergence take hold? That's normally my strat 4, and that's between 115 and 114. Okay, so that's what we're waiting for from swing trader side of me. I'm waiting to short the market and in anticipation of the longs that I bought on spot. Okay, now last little piece of information, the point and figure chart, our Wyckoff chart. This is my best friend because it's my destination roadmap, guys. We use this to look at where liquidity is waiting for, and then we pounce. Okay, so what happened was we're still looking for 120 to get tested, but we know nothing goes up in a straight line. If it does, it's going to get reversed. If it's fast, it won't last. So what we had was a little bit of a gap sitting right there at 113, and we've been waiting for that to be the buy zone. So in anticipation for this, my imagination is telling me that we're going to rally from here, turn 115 into resistance because we've got a clear gap sitting in the point and figure chart. And whether we hold and go to the upside or whether we fail and go down lower, only time will tell. We can only speculate on that. So the best play for us now, shorter time frame, 15-minute, is to look for a long so that we can look for the short on the 4-hour so that hopefully the bullish side on the daily can stay and the weekly can remain bullish. There you have it, guys. And that then means that if we look at our altcoins like Link, Aave, Solana, those, if Bitcoin then wants to give us that little rally, they will probably go and test levels. So for Link, probably 22, somewhere between 22 and, yeah, let's make it around $22 a coin would probably be the exit. So if you're trapped, say you're trapped with some spot Link, consider offloading at the test of a support that was lost, turning into resistance. Because if you're wrong, you can always buy back later and then have a little bit loss. As opposed to, remember, no financial advice, as opposed to something that turns and the market can stay wrong for longer than we can stay solvent, guys. Bigger picture, you know, school's not out on whether we're at the bottom of this retrace. Okay, so that's me. And now, over to our friend, Matt. How are you doing, buddy?
I'm good, thank you. Yeah, good to hear what you have to say. I'm in total agreement that it could be, I mean, it sounds like it's not helpful saying it's one way or the other, but you actually need to appreciate there are two sides to the market. It could go either way, and you just have to structure your risk reward accordingly. And I see that in a lot of what you're saying. So I've started with Chainlink here. Just I'm assuming that we have You can see, I'll just scroll out a little bit so you can see. I'm assuming we have a potential 1, 2, 3, 4, 5, so an impulse to the upside in the making. We could look longer term, of course, to get the overall picture, but assuming this is, we're currently in a wave 4, then we had a wave A. The most common relationship between the C wave and the A wave is equality. So I measured the A wave, transposed the top of the B wave. Equality takes us to virtually almost exactly where we got to with the sell-off last night and this morning. And very, very typical of a C wave here that we see this very sharp wick down. And for the moment, it's shot up quite aggressively. So I'm thinking that if this was a wave 3, this is wave 4, ABC wave 4, then we could get a nice little wave 5 to the upside. But I'll move over to Bitcoin next and just show you my thoughts on Bitcoin. Okay. Again, obviously, I believe it's fairly similar, but like yourself, there are two obvious possibilities that from this move up that we had to all-time highs, we've had, I think, quite a clear ABC to the downside. But as we know, this could potentially just be part of a larger correction. So it could be ABC as an A wave, then a B wave, then a C wave. If it's a B wave, by the way, then I must have counted this wrong because a B wave couldn't be in 5 waves. So maybe
that's my thoughts as well. You know, it has to be a 3 wave to the upside, and it just doesn't look that way.
It could potentially be. It could potentially be. You know, we could. You know, you could have an A wave to here, a B wave down here, and this could be a C wave. So we've got a 535. So it could be a zigzag 535 potentially. So I may have miscounted it. So it could be a zigzag higher. And if that's the case, then we would expect potentially quite a bit more downside to take us to a much larger ABC. But I've labeled it for the moment.
We should get a 5 wave correction then. So this would be the beginning of probably 5 impulse waves to the downside.
Correct. So, but what I've done, I've tried to keep my bullish hat on for the time being, but I do fully appreciate that this could just be an A wave down, a B wave up, and we could be getting a C wave down. I need to relabel this whole area here then, if that's the case. But I've tried to keep my bullish hat on and say that we've got ABC down, and there's never 100% certainty with wave counts, as you know. I've tried to count this reasonably carefully. Got a wave 1, 2, 3, 4, 5. Proposing this is a small wave 1, then ABC down for wave 2, and then we would potentially move higher. Now, what I've tried to use, I often use correlations in the market. So I used XRP to try and give me some clarity on where we are with the overall market. I proposed this, I think, on the show last week with you. We were somewhere up here with XRP, and I proposed that this is a possible triangle, wave 4 triangle. If I just scroll out a little bit, we'll show where potentially we're at. So potentially we've got from this low point a wave 1 up, 2 down, 3 up, 4, and then 5. The 4 is proposed triangle. Obviously, wave 4 couldn't cross into territory of wave 1 here. So this triangle formation here, A, B, C, D, E triangle formation, couldn't cross into this territory of wave 1. So it's proposing that we get a wave down from this D, which should actually be in 3 waves. As I've got it labeled A, B, and C. And actually, I might just open that out a little bit to show you how good it is. We've got a nice little 5 waves down for wave A. We've got a nice ABC up for wave B. And then we get a very sharp move down for the C wave, which makes up a larger, ABC makes up a larger E wave. So the triangle is made up from the top here of wave 3, ABC down for the A wave, ABC up for the B wave. I've actually got a little triangle possibly here for the B wave, C down for a W, X, Y to make the C wave. So it's still a correction. Then ABC for the D wave, ABC for the E wave. So a triangle is a pre-terminal wave. The thrust out of the triangle, which would be to the upside, will be a terminal wave. Now, this is the trend line I've got drawn here, the AC trend line. The D wave often can overshoot or undershoot. There wasn't much room for an overshoot because remember, we cannot cross this dash line.
We're not allowed. Yeah, then it invalidates the count.
So it was likely that we're going to see basically a slight undershoot, which is what we've seen so far. Last night we saw an undershoot and went down to 268, I think, on XRP, somewhere around 268, 269, somewhere around there. I was saying on my X for the last week or so, we're not allowed to cross into this 265 area because that would invalidate it. As you say, if it's invalidated, we have to scrap it and start again and see where we went wrong. But for now, this looks really nice as a potential triangle. If it's true, then we could get quite an aggressive move to the upside for XRP. So I agree with everything you've said, really, with all the tokens. Looking at Solana as well, you know, we had again, I put proposed labeling in. That can certainly be wrong, and this can just be an ABC down, and then we could push quite aggressively higher.
Yeah, then it's over.
Yeah, I am expecting higher. Also, JASMY, I like to look at JASMY, but just because I know it has an amazing community that really follow it closely, and they've been looking at, you know, scenarios of, can this still be bullish? We had such a nasty sell-off, and people, when it was moving up, were saying, oh, you're totally wrong, it can't possibly move down. Well, we counted from the start here a wave 1, 2, 3, 4, 5. And what was interesting here, as we know, a third wave, there are various fractals. The third wave itself would be made up of 5 waves. So I'll open that out some more just to show you my thinking here, just to try and make it a bit clearer, to focus on this third wave here. So we've got the wave 1 to here, 2 down here, 3 up here. So the third wave should be made up of 5. So what I did, I proposed the first wave to here, short second wave down, then a third wave higher. So I measured, I'll just move this now, this measurement here, from the bottom wave 2 to sorry, just have to move that to make it more accurate. So this point here, I've not got it labeled as wave 1 because I can't have too many labels in here, but I propose this is wave 1 within wave 3, then wave 2, then wave 3 here. So what I've done is transpose that then to the little wave 2, and it gave me the precise end of wave 3 at 2.618. Now we know the golden ratio for Elliott wave and Fibonacci is 1.618. 2.618 is the next ratio extension, very, very important one, very common in cryptocurrency. We often see the bigger extension, 2.618. Although I've got 3.618 labeled here, that's not a Fibonacci extension, but it is sometimes an extension that is used. The next true one is 4.236, and maybe another day we'll just go into how we derive those fib extensions and retracements. It's quite a simple.
For me, what I like about this chart, just to add for the viewers, like to make it simpler for me to kind of identify that internal 5-wave structure that you were hinting to. The easiest way, or the easiest giveaway, would be, you know, where your 2 is, the RSI at that level. And you look at where your 4 is, the RSI at that level will typically be lower. That's hidden bullish divergence, and that's your wave-on-wave divergence. So normally that's the telltale signs that, okay, we've got that one labeled correct. So if that happens, you know, that for me is my confirmation, which is quite.
I noticed you talk a lot about divergences, and I think they're one of the most powerful predictive tools there is. I mean, we've got a very clear divergence from here, from this point here, which is the small wave 3 within wave 3, to the actual wave 3 I've got. So we've got obviously higher highs on price, and we've got corresponding lower highs in RSI. That told us there's going to be a sell-off from this point, and clearly that's what we got. So that was really nice. There aren't always divergences, but as you say, there are different divergences at different places, and we can look at bullish and bearish. As you say, bearish divergences are great because they're continuation, and it's very difficult to actually pick turning points, but continuations are sometimes better and give you the opportunity to buy the dip.
Get into the momentum just makes the odds of success so much easier than trying to, you know, wrap your head around, is this the bottom, is this the one? And it can burn you.
If you think one of the safest strategies is actually dollar cost averaging, now this actually ties in very well with dollar cost averaging. When using hidden divergences, it allows you to buy the dip really nicely, and buying dips is a great way to dollar cost average. So if you can then if you can actually look out for a bearish divergence, it can give you an opportunity to buy the dip. So anyway, that was a larger way.
I actually, on that point, I use that for my long-term swing longs for Bitcoin. So when I'm in a good position, where we're at right now, 113 thereabout, is where I'm looking to dollar cost average another swing long for the continuation from the 108 buy.
You
know, because if it's going to be bullish, it's going to bounce here. It's simple.
Absolutely.
If it fails, then I know I must take profit a little bit more aggressively, or make sure that my short's strong enough to cover that.
you're right. We're looking for a potential serious bounce if we're going to be bullish, because we've got here a wave 1 up, 2 down. Then we got the smaller wave 1 and 2. That's a smaller fractal. So then the next wave should be wave 3 of wave 3. And wave 3 of wave 3 is normally the most powerful, most aggressive wave. So we could potentially expect some really aggressive movement up. So that's what I'm hoping for this week. And remember as well, we often get these big moves over the weekend, sometimes against the trend. So we've got quite a sharp sell-off, potentially against a larger trend over the weekend. It often goes into Monday morning. And I've noticed this many years of trading. I have noticed that when you get a strong move in the previous week and you get a move against the trend over the weekend into the Monday, then throughout the rest of the week, we often get that strong bounce that we're hoping for. And I really have noticed that from trading, particularly back from 2008-9, the financial crisis there. We saw big moves over the weekend when the market was quiet. And even crypto, even though it's 24/7, we still see quieter markets over the weekend. And it allows effectively market makers and whales sometimes to move prices, pick up stop losses from often from retail traders, and then prices, they can pick those up at low prices, the assets at low prices, and then ride them higher in the week ahead. I've seen that very, very often. I think just finally for me, I like to look at dollar index because, we've seen, obviously we had a reduction in interest rates last week, on Wednesday of last week. That was the first cut in a year now for the Fed, and they're talking about more cuts to come. But the problem is they've got a dual mandate, and they're talking about they need to manage inflation and they need to manage full employment, or try to
keep that low.
Yeah. So it's a counter thing, two opposing forces they're trying to balance there. Obviously, if you're trying to reduce inflation, you'd look at higher interest rates. But if you're trying to promote higher employment, you would reduce interest rates. We know Trump has been calling for lower rates, but actually Powell has probably done the right thing because he has to abide by this mandate. Inflation is still elevated. And this is one of the reasons possibly behind the sell-off over the weekend. There's a bit of a disappointment that we were looking at 2 more rate cuts this year, and we're looking at over the next, we actually had 6 rate cuts factored in over 12 months. That's now been reduced to 4 rate cuts over 12 months. So that scaling back of rate cut, calls for rate cuts over the coming year is actually negative for risk assets in some ways. And so that could be one of the reasons why we're seeing not only a bit of a sell-off in risk assets, but also we see here a little pump in the dollar. Normally, I wouldn't say normally, but very often you see an inverse correlation between the US dollar and risk assets like Bitcoin and cryptocurrencies. It's not always the case. Long term, of course, Bitcoin is correlated directly.
As soon as you go daily, weekly, it becomes more correlated or inversely correlated.
Absolutely. Well, if you look at long term, obviously Bitcoin is positively correlated with the dollar, because the dollar has been in an uptrend ever since Bitcoin was created back in 2009. The dollar has been in an uptrend. Now we've recently.
Well, it's an interesting take, because your all-time highs, but I see where you're getting from it. It's a different way of saying it. Every low is normally when for Bitcoin is at the height of your channel. And every high for Bitcoin is at the low of your channel, but it's been trending up. So yes, you're right.
That is often the case. I mean, certainly we can see from this chart, we see this is the now on the monthly chart. So looking very long term, right back from when Bitcoin was created here on the left. And then we had the FTX low up here. So the FTX low, that's where Bitcoin was 15,004, corresponded precisely with the dollar index hitting the top of this channel. So this parallel channel, it's not perfect, but it's roughly a pretty good parallel channel that's gone from 2009, that's given boundaries for the dollar above and below. And interestingly, there are some points which actually show that you can't be sure, but usually when you see the dollar index turning, that is a major turning point for cryptocurrency, for Bitcoin in particular.
That's typically a bad sign.
So it doesn't necessarily mean that when we see a high in the dollar index that we see a low in crypto, because we can see other highs. Well, we did see here, for example, we saw the COVID low Bitcoin was of a low of 3,850 here. We're mid-channel here. We saw a price peak in Bitcoin. So this was a peak in Bitcoin. This is just showing you the difference here. There's a peak in Bitcoin here in 2017, but that corresponded also with a peak in dollar index. So it's not a rule that they definitely correlate, but I'm just saying whenever you hit the boundaries of this dollar index of the channel, it tends to correlate with a turning point in Bitcoin. We do have, it's not hit the bottom of the channel here, the parallel channel that I dropped down, but I did put another support line here. You can see from the bottom here, here, and here. So we've got 3 good touch points now. And we see that Bitcoin did bounce off there. Dollar index did bounce off there quite nicely. That did correspond with Bitcoin all-time high. And that was corresponding with dollar index low. And now we're seeing dollar index pushing higher, and we're seeing Bitcoin that's pushed down a bit. At the moment, we have a doji, pretty much a doji here, where we've got a shadow below, a shadow above, and the price is in the middle. But you cannot interpret these until you get the end of the candle, because it might not end as a doji. Right now, it looks like it. So we need to wait always. Never interpret any candlestick formation until you see the end of a candle that you're looking at, or candle, formation of candles. Once you see the end, then you can try and interpret them. Right now, though, a doji candlestick means uncertain. And that reflects what we've said about Bitcoin. There really is potential, whichever way you count it, and whichever way you look at the divergences, there's potential for higher and lower. So this is not necessarily the best time to jump into a market because it's undecided right now. Let's possibly wait for some confirmations before we jump in. But again, that's why I like to look at these correlations. That's why I was looking at XRP. That for me does offer good risk reward. So between different assets, you sometimes will find some that offer good risk reward. And if you're looking long term, as I say, this could potentially be close to a major turning point in Bitcoin. And bearing in mind, we've been in an uptrend for Bitcoin, and potentially we're looking at a possible turn to the downside now, or maybe in the not too distant future. My view is that I do still believe we're probably going to reach another new all-time high for Bitcoin before the party is over. But we do know, looking at those halving cycles, I won't go into that now, but we know looking at the halving cycles that we're round about the territory of where Bitcoin within a halving cycle would be expected to turn negative. In other words, where it would reach its peak within the halving cycle is round about now. We're about that 38.2%, as we discussed last week, into this halving cycle. So that means we could potentially be looking at a downturn, but I'm just hoping that my count is right. Don't forget, we could have here 1, 2, 3, 4. The wave 5 could be complete here.
That's the other side of it,
Yeah. So actually, this could be a completed wave 5 because it is actually 1, 2, 3, 4, 5 itself. It could be a completed wave 5. I've labeled it with hopefulness that it's just wave 1 of wave 5. And I'm hoping wave 5 goes much higher. And I do sometimes see with Bitcoin, we know with commodities that wave 5s are often the extended wave. So we see that with gold. One day we'll focus on gold, perhaps, even though maybe this is a crypto channel. It's good to look at gold.
No, we do gold and stuff at some stage. We just always so limited for time because just like we like to go in depth here on the channel. We're not here to try and just say it's a buy and then it's okay. I wanna know why you say it's a buy. We want to understand why. So it means that the amount of stuff we can go through is normally an issue, but we can always bring you back. The guys want gold. We can
gold is gold's an amazing chart. It's really it's been obviously in the long-term bull now. Looks as though it's got further to go as well, but it's a very, very nice chart. Some great Fibonacci relationships along the way, beautiful clear Elliott wave counts, and some correlations as well with Bitcoin. So I like it, and that's what I was just saying, that gold often extends in the 5th wave, and as we see Bitcoin
hopefully it does the same. That's why I'm also looking at where we're at right now as a potential smaller one to retrace now, and the extension still to happen. So fingers crossed.
Yeah, let's hope so. There's enough institutional demand and buying potentially behind Bitcoin now that could drive it into a really nice extended 5th wave. Just like gold, as I say, that once you get a nice extended 5th wave, it can go a lot higher and we'll be looking at some of those more extreme Fibonacci extensions, the 4.236, or even the 6 point, what's the next one? 6.384, I think it is. I have to check.
I think it's the 6384 if you're, makes sense.
Yeah.
But okay, fingers crossed, guys. Let's quickly maybe have a look at some requests. I see there's a few requests. So what I'm going to do is I'm going to ask you to prepare a Sonic chart. Then I'll have a look at ENA, and then we will get back for, let's see what else we have. So let's do that, and then I'll quickly look at ENA for you guys. Guys, send in some more coins if there's anything. We're going to do a quick charting thing. While that happens, I'm just going to bring back my screen and switch over to the charts, the other alts. I said I'll give you guys some top tips on alts today as well. So KMNO Finance, just real quick. So we had on the daily and the weekly timeframes, important timeframes, we had price go and tag that liquidity there. So the critical thing with KMNO is where we're at right now, guys, is we're pushing all-time low regarding risk. The closer you get to a support level, a critical, a proper support level, the cheaper it becomes to take the risk, because if it falls below, it invalidates the argument and things will get bad. A good example of that would be OP. If we go and have a look at OP and we rewind time, we're sitting in a situation where we go and test the previous area that was support lost. So if it turns into resistance, things will get bad. You'll see your portfolio shit the bed, as one of the guys in my group said this morning when he was looking at his one. So these are things that we need to keep in the back of our head. Now, while we're on that, I'm going to quickly then just open my ENA chart and then have a look at that. So the trick with this one is, and I've got an Elliott wave here. Now, I run out of real estate, Matt, so I tend to draw them incorrectly there, looking at the extensions or anything like that. But in short, for me, what I'm looking for now, and the gray was where we were, the way I had it labeled, and where the green is how I've got it labeled now. So the ENA update is very simple. I'm looking at the RSI. I'm saying to myself, okay, if this is the beginning of where the wave formed, where would typically be my wave 2, the RSI, and that would be there. And because that is the case, we've got hidden bullish divergence. So with ENA, in allowance to this on the smaller time frame, things can probably go as low as that and still be bullish, but without now considering that we're breaking the internal wave rules, and so forth. So it's a tricky one for me. So I take things level by level, not trying to fall victim to stuff, guys. And for me, the level that it needs to hold is 51, and the most probable area is 51. And I use GAN for this. If we look at this and we say that that's a 1, on the basis that we've now created the 3 of the smaller waves, and now that's the 5, which completes the 1. The rule that GAN says is the market will, in often cases, if it's an impulse, retrace 50% of the time, or 50% of the move, okay, 50% of the move, and it will do it in half of the time that it took to create the impulse. So from there to there, you apply your GAN time impulse, and it means that it will do it within time, or within, or before the 11th of October. So it could be that we're going to be bouncing around this area and we're going to be chopping around this range before we start moving. So it's doing everything accordingly. Okay, so that is why I am bullish. And also, when you said earlier, Matt, about talking about giving them the benefit of the doubt, if we look at these alts charts, Celestia is probably a bad example. Sui from Sonic is a bad example. But in most cases, if I look at these alt charts, they scream either go test the area and then fail and go dump further. So even if you're bearish, it looks like there's a little bit of a bullishness to it, undertow. And that's that benefit of the doubt. So I hope that for Joshua gives you an ENA update. So I'm looking at that area. I'm now going to bring up Matt's chart so we can have a look at his view on Sonic. Because Rabin, you know my view on Sonic. It's stay away. So maybe he can give us a little bit of a different light onto that. So there we go. Thanks, Peter, for bringing it up. Okay. Over to you, man.
Yeah. Let me just see. I think I might just scroll out a little bit more.
This is a chain link chart. We wanted to look.
Sorry, I knew it was looking wrong. Yeah. I mean, I like chain. I was looking at chain link just because I thought ahead of time I was just saying 120 is the bottom on a good risk reward area. We're pushing nicely up now. But anyway, let me go into Solana.
No, Sonic. It's just the S.
Oh, Sonic. Sorry.
Sonic, the old Phantom token.
Have I got Sonic on here? Let me just check. If not, we'll put it on.
Okay, so the question is, where's the best place to get out of Sonic? Okay, so
it's okay. I'll put it on.
It'll
be interesting just to see this quickly, without having a previous
viewing. You'll have an impartial look at it, which is what I'm looking for. Okay, so there we go. There's the chart.
Just opening out, obviously, just looking at it straight away, we've got basically lower highs and lower lows all along the way, which is obviously a nasty. And you can see, actually, I had this. This is something ages ago. I had this downward arrow. I'm not prepared for this at all. This was put on back in August. I had a downward arrow saying that this was basically a correction higher from here, an ABC correction higher. So I was expecting a low to take us below this low here, and that's precisely what we saw last night. So that's obviously the weekly. Let's go on to the daily. Let's just see what we see a little bit more on the daily. I'm assuming, I was assuming there'll be some sort of divergence there. I won't look at that.
This is wrong chart. Sorry, guys.
Yeah, I was just looking at it now, trying to figure out the pricing. Well, let me bring up my screen quickly. We quickly have a look at that one. Matt, maybe you can look at BNB. Do you have a BNB chart for us?
Yeah, probably.
Okay, then bring up my chart there, Peter, and then the Sonic for me, the main idea is where we're at now, is we're sitting in with, and this is the hope. If we go weekly time frame, we're sitting at about 30 cents right now. Weekly time frame, we're at 24 cents. So if we can get this strong bullish divergence to stick, okay, I'm just going to do that for you, Rabin. If we can get the strong bullish divergence to stick, so go down, maybe tickle this a little bit, and reclaim this area 26, that could be a good support range. Now, if you want to exit this, you're saying, well, I'm done holding this. This is the problem with being in something that basically keeps on trending down. You can argue that this could be the low. And then if it doesn't, then there could be a lower low, just like we had there. So 4-hour time frame, I would say if you want to try and exit this, just say to yourself, very simple. The move was fast. We were hoping that 20 or 30 cents, give or take, was going to be support. It's lost, clearly lost. And what the market tends to do when there's a big move, it will go back to the scene of the crime where the support is lost, and it will go and test that range. So between 24 and 28, that's where you get out. Now, the risk is, Rabin, just on your argument, remember, no financial advice, but if you're wrong and say this is the bottom and you're selling the bottom, which is what happens a lot of times, the market will go and test critical support levels. And that is the amount of loss that you still need to be able to live with. So you're getting out, selling at resistance. And if you're wrong this time around and you sold the bottom, you can then use that to buy back in and then be okay with losing a little bit, other than losing all of it. That's the view. While we're on that, I see there's a quick few requests. I do have the chart ready, so I'll just quickly bring them in there. Aerodrome. So I saw Aerodrome from Enemy Perez, okay, or Emery. Sorry, Enemy. Okay, so for me, Aerodrome, what happened there? We were looking for continuation. We had divergence. So I'm just going to take this to the daily time frame, and the play for me is we're trying to bounce on support area. We've got a massive imbalance sitting around that range. And looking at where we're at right now, nothing really telling me. So This looks more like the beginning of the emotional market cycle, this one, the beginning of that, as opposed to continuation. Not to try and be too negative, we take things level by level. So if we can close the week, the daily and the week, above $1, it's still good. Otherwise, your argument is going to be price is going to head for 70 and potentially 80 cents thereabout before it's going to have a little bit of upturn, and then it will try and turn $1.20. Between $1.10 and $1.20, it's going to want to try and turn that into resistance for continuation. So that's just a real quick update on that one. I'm going to bring the charts back to you, Matt. Remember, guys, Matt had 0 time to prepare for this. He just jumped in for the love of TA. So send him some love. His Twitter handle is at the bottom. Go follow Matt on Twitter, and Matt will also retweet and everything the stream so that everybody can get him and know where to find him. So that's it. Matt, over to you, my friend.
Yeah, so just looking at the BNB here, it's been really very powerful token. It's one of those tokens that really does have some good utility, and they're buying and burning, reducing supply, etc. along the way. So yeah, long term, it should be one of the better tokens out there. I think there's so many tokens that don't have utility. I like tokens that have real utility. Link being one of them. I know I've touched on a few times. Link, BNB. There's quite a few out there that have real utility. Solana, of course. I've just looked at this. Obviously, I looked at what is a very clear ABC down, I think, here. There's no way you could possibly count this as 5 waves. So we've got basically, I've just put on here, potentially wave 3 for BNB, ABC down as a wave 4. So starting my count from here, really. So again, I think we have a nice impulse here, 1, 2, 3, 4, 5 for a wave 1, another ABC down for wave 2, and then a large wave 3 up to here. And wave 3 is normally the most extended wave, and it is here. And I don't know offhand. I'll just measure the fib measurement here from that.
And then typically your wave 3 to 4 correction would take the longest time as well. So it won't be the shortest correction. It typically will, and it does have a longer correction period, your 3 to 4.
Yeah, so you often get this, it's not a rule, but a guideline of alternation. So if we have a wave 2, which is quite a short, probably a zigzag, I imagine here. It could be zigzag or flat without opening out and looking more. But anyway, it's a short, rapid correction here. And when you get that for a wave 2, then the wave 4 normally alternates, and you get it normally a more drawn out, a different wave pattern normally. So if you have zigzag here, you might have flat here. Or if you got flat, you could have zigzag, or you could have triangle potentially. And this isn't definitely a triangle, but it looks, it could just be potentially an ABC finished here. It could be that. That could be as simple as that.
Yeah. With a very slow grind to the upside.
But either way, it's a correction. There's no doubt. Again, we can't really count this as impulsive to the downside. I don't believe we can. And we've got, as I say, A, B, C, D, E, and E wave is allowed to undershoot or overshoot the trend line. So potentially it's a triangle, and triangles are pre-terminal waves. So the wave out of it, the thrust out of it would be a terminal wave. We've potentially got a wave 1, 2, 3, 4, and we could be working on a 5th wave to the upside. Looks like it probably has some way to go. It's fared really, really well, hasn't it, over last night with the sell-off across the market. If you just open that out, it's done really, really well. I'm
actually one of the altcoins that, when we had the bear market, sold off less than Bitcoin as well, or close to it. I think it only had like 70% drawdown, where everything else went down 90%. So it's a really strong coin, this.
Yeah, this is why I say, if you look at utility, when you do get a bear market, those tokens that have real utility and can really still generate, and particularly using buy and burn.
People not to sell it.
Yeah, if you're buying and burning your token, obviously you're reducing supply, you're increasing demand. So even in the bear market, you've actually got both those characteristics which should drive price to the upside. Obviously you've got the massive, if you have a bear market, you've got some downward pressure, but even so, you've got some positive things on both supply and demand, which should help keep the price pushing, more towards the upside. And that's precisely what we've seen here. And I think it's actually one of the better tokens, possibly even, if you're looking at something as a store of value. They talk about Bitcoin being digital gold. Well, I actually think BNB at the moment with
Solar.
Binance.
Oh, bro.
Yeah, I mean,
I'm remembering fondly my BNBs when it was like $20. I had $30 BNBs, like crazy amount. And if I think back at it now, I should have never sold that. I mean, I had thousands of stuff. And so hindsight's 2020, guys. I mean, we're all layered with regrets by the time you get here. You know, you don't turn gray for nothing.
I think it's a good strategy. I learned way years back in my stock market trading history or career that if something doubles in price, basically you sell half and keep half, and then no matter what happens, you've obviously got your money back and you can leave the other half. I know with crypto, a lot of them will actually amount to nothing, but some of those like BNB, like Solana. I mean, look at Solana, what it's done. Crazy. I sold a lot of my Solana, was happy to take it to sell at $12, I think, and look at it now.
I live by that rule. Everybody here knows it. Any new altcoin, when we bring it, buy it, doubles your money, sell half, and then with that you can go dream big. But at least you still have your initial capital back, and now you can look for your next great investment. And maybe 1 out of 10 does turn into a BNB. Then you're lucky. Then you have it. So it's a wise way of looking at it, in my opinion. I wish I just did it first, earlier in my life.
Yeah. The only thing I would say here and again, when we're looking at divergences, so we can just put on the divergence here. So we've got, just find somewhere around there.
No, it's already there. You can clearly see it's there. It's nearing end signals.
But what I like to say about it is that I never count a divergence until you see a proper reversal signal. So I wait for some sort of confirmation. You don't have to use a candlestick confirmation. You can look at other indicators, but I usually look for a candlestick confirmation, and we don't have it as yet. Certainly not on the weekly. So it's even possible that this could continue higher. RSI could go above this level here, and then the divergence is eliminated. And that I've seen often happen when people use divergence as a trading signal. But you do definitely, in my view,
short that thing into the moon.
You have to wait until there's an actual reversal signal, because you see at the start of a week a red candle. Again, I've seen this time and time again. When you see the beginning of a candle start, for example, this one started negative at the very beginning of the candle, it often ends the other way around. So it's often the start of the candle is kind of used to catch people out. And you can even see that right down to the hourly candles. If you look at it, just check it out for yourselves. Look at it. When you see a negative start to the hourly candle, very often you'll see that hourly candle finish in green. So I think it's a great way. If you enjoy scalping, there are many different ways you can trade, but I think that's a great scalping strategy to use, using candles that start off in one way, and you can put a reasonably tight stop loss and look for a decent upside. So you can get a good risk reward on your scalping. You can do multiple trades there, intraday trades. And I've actually made good money using that strategy in the past. Very good money. So
I call it the daily or the weekly overlap. So what I like to do is look at the week and expect that there should be an overlap. Most of the times with big moves, it won't be more than 23.6 of the entire wave. So if you take it there from your low, where you started to draw your divergence, price won't fall lower than the 23.6. That's normally a really good continuation fib. So if you go to your lows there at around 840, thereabout, and you put a fib on that to the highs, you can now scale this back to weekly or monthly. Yeah, around about there, then you will find that price won't lose the 23.6 level. And when it does, that's when the real reversal occurs. And then the scalper in me hunts between where price is at the high and that level for that continuation long, not trying to overthink things. The momentum is clearly there, so don't try and be too smart, when you're trading with momentum. Just let the momentum do the work for you. So that's an easy way to not get hung up, because yes, it's easy to say that this needs to be shorted now because it's so overbought. And that's a really good reason for this thing to maybe go up another $1,000 and still be.
We saw it just tag the 23.6 line there, didn't we? It just tagged it. And it's pushing higher again.
Yeah, so the 23.6 is a really golden continuation momentum level for me. As long as it bounces up and down and fluctuates, it's fine. Lose that, then you're going to go to your golden ratio, 38 to 618, those levels. But until then, it's get in with a move, kind of quite.
Yeah. So again, it's a little buy the dip opportunity, perhaps, when you see it touch that 23.6. Probably good risk reward characteristics there. So your risk is, maybe 1 unit to downside, and your reward is, at least 10 units to the upside. So you got, possibly as much as 10 to 1 risk reward on that trade if you had your stop loss just below here, below the recent swing low, which was here actually. So even if you put your stop loss here, it's actually a 2 to 1 risk reward. So you put your trade on here just below the 23.6, your stop loss below the recent swing low, which was here, with a potential take profit above here. So you've got a good 2 to 1 risk reward anyway. And if you've got better than 2 to 1, overall, you should actually be making profits on your trading. It's not about winning every time.
But there you have it.
Yeah. So
closing comments. We need to close the stream. We're up an hour. I always say I want to try and make these YouTube videos 15 to 20 minutes. We always take an hour. And Peter knows this by now. It's the biggest lie that this channel is built on, and and so forth. So give us your closing remark, and then we maybe get in. It's about 350 people joining in live, guys. Do us a solid. Oh yeah, and Peter is saying, remember the video is brought to you by Blowfin. You want to support the content? Big video links in the video description. Get your Blowfin account, and for the rest of you guys, I mean, yeah. Over to you, Matt. Let's finish it up. Closing comments.
As long as XRP stays above this dashed line here, then I'm bullish because that's a triangle wave 4. If XRP is bullish, I actually think it's well enough correlated with the rest of the market that the rest will be bullish too. So we saw a beautiful almost test of that dotted line, a beautiful ABCDE triangle formation. So I'm actually really bullish at the moment, and risk reward I think is good to jump in to dollar cost average. Obviously, we're not giving financial advice, make your own decisions, but dollar cost average is my idea to get in at these sort of levels with a view to all-time highs for XRP and for many other tokens. Although you did mention Solana, by the way, before. I think Solana, although it will push higher again, I actually think it could be a large correction down, a large correction higher, possibly retest.
I'm out. Solana, I called it 240, sold my bags. Done.
Yeah.
Done. Solana is dead to me now. I know. So the fact that you're saying it, I mean, we're reading the charts. Maybe we need to get somebody with a completely different view to challenge us next time round. What do you think, Matt?
Well, I mean, that's good, but I still think that Solana is going to bounce higher again. It'll take out that 240 watt area. It could even retest the previous all-time high of 295. It was a big correction.
The downside risk is too big. I mean, this thing can go back 170 before you even talk that. That just doesn't make sense. A lot can happen.
I agree with you 100%. Just from a charting perspective, though, I think this is. I'm confident this is a correction down. So, being a correction down, we may still have a correction higher, maybe to somewhere around about the previous all-time high. Then another big leg down. So, risk reward is horrendous because the downside is big, the upside is small. So as you say, Solana perhaps should be dead to you from a trader's perspective right now because risk reward is horrendous. Instead of being 2 to 1 in your favor, it's probably 5 to 1 against you here. So it doesn't make sense.
And from a fundamental point of view, I mean, the Solana network was all the NFTs, all those degen type of stuff that was pumping that now. I mean, everybody's at pump fun. So, the height of the coin, the layer 1 that's driving all of this is based on that. I mean, I don't want to open the new debate now. I've got 1 minute and 10 seconds to close the stream. but for me, it feels like a good level. I mean, I'm happy with myself.
Yeah. And maybe Pump has had its day, let's see. But Pump has actually got some good stuff going on internally, fundamentally. So maybe Pump has a future. And don't forget,
entertainment can take things into crazy prices. I mean, NFTs was also not just art, it was entertainment. People were enjoying doing what they were doing, looking at the pictures, saying, I've got this one. So we had crazy stuff, So Pump Fund is in the beginning of, I think, what would probably be, easily to compare it would be to Theta in the 2020, 2020 bull run. Yeah, 2020 bull, Theta. I mean, that was an insane thing. and a beat at some stage. So yeah, for me.
Although pump has been
Okay, I'm gonna bite. We're gonna push. Wait, just give me targets. What do you think?
No, pump has been one of the reasons why Solana is pumped, because obviously Solana is based more on memes these days rather than NFTs. So because all of these memes going on to pump, and pump has got a lot going on. So we've had a good pullback on pump. I actually think we're going to go to new highs on pump to take us probably to, probably above the previous high anyway. So take us to a cent and above maybe. So I think there's a good future with pump at the moment.
Yeah, and if you missed the bus from pump from August, these lows, I mean, your invalidation would be, your 4 can't cross below the height of your 1. So you would typically look for that area. What's the price? I can't really see.
Yeah, I was just looking. Oh, the price of 1 was, I see what you say. You can't really see. Search on there. You see the high was 0041.
Yeah.
0041, so 0.4 of a cent, wasn't it? But anyway, if this was a wave 3 here, it went just beyond the 2.618. If this is a wave 4, then we expect wave 5 to push above that, possibly to take us to a cent on pump, bearing in mind it's 0.6 of a cent now. So we're looking at more than 50% upside potentially. And as you say, the downside though is still quite substantial. Sorry, to the top of
that
here.
Is big. It's a tricky downside one still.
Yeah. So again, it's middle, it's sort of no man's land. So it's not one that I particularly want to trade at the moment in terms of taking new positions, but I still think it has good potential.
And I wouldn't put my life savings in it just yet, but I know it's going to go up. It's a tricky thing.
Anyway, thanks for having me today. It's been a pleasure.
It's been awesome talking to you. I think we've done everything and said everything we want to see, guys. You know what you do. Go follow Matt on Twitter. He does a lot of good content there. And we'll be seeing you guys again tomorrow, same time, same place. Cheers.